So if you've been watching the news lately, between gas prices, inflation, talk of recession, there's a lot of noise and it's hard to differentiate what to worry about, what's real, and what's just hype. I'm here to help you cut through that in today's Market Watch in a Minute. Hi everyone, I'm Ehab, your favorite San Diego Realtor with the Hawley group here at Compass. And today I just wanted to kind of cut through some of the noise that we're hearing with all of the economic news that's surrounding us. We are definitely seeing a shift in the market, and that is actually a really, really good thing. We've been running so fast for the past 3 years, it's the equivalent of driving 100 to 120 miles an hour on the freeway. That's great, you get there really fast, but is it sustainable? Absolutely not. And that's exactly what we saw in the housing market. So we are starting to see a deceleration. And that is really positive. We're basically getting back to running at the speed limit. So what does that mean for you? If you're a seller, 2 months ago, you looked at your neighbor, saw what they sold at, you go 5% above that, put the sign in the ground, you probably have 20 offers in your hand by the end of the weekend. And that was great, but that's not where we are today. So it's really important, if you're thinking of selling your home, that you really understand where the value in your property is. If your home needs a lot of work, or if it backs up to a major road, you may not be able to get the same kind of pricing that you saw just a couple months ago. So it's really important that you price it accordingly and that you set the expectations. We are now running probably anywhere from 30 to 50 days on the market, whereas a couple months ago that was 12. So it's important to get your expectations set, that it will take a little bit longer. You want to price it accordingly. If you're a buyer, yeah, you're paying more because with the interest rates. Again, going from 3% to 6% has done a lot to impact what your monthly payment is going to be, but there are pros in that as well. One, the rate is temporary. It fluctuates all the time. You can always refinance down the road to get to a lower rate should they drop. But more importantly, as demand softens a little bit and we get back to that balanced market, you will have some more leverage to bring to the table than what you've been able to do for the past 3 years. So this means you might be able to get more credits. You might be able to talk down on the price. You will not necessarily have 20 offers to compete against. There may be 1 or 2 or maybe even none, and you might be the only buyer. You'll have more time to kind of conduct your search and really understand if this is the right home for you. So that's a positive. From the sellers, don't fret. This doesn't mean that the world is coming to an end. We're still at historically low inventory, so you're still going to have some leverage here too. We only have about 2,800 single-family homes on the market right now. Normally for this time of the year, you want about 8,000 to 9,000. So inventory is still tight, and that's still going to work to your advantage as well. So bottom line is, nobody should be panicking. Yes, the market is shifting, and you need to make sure that you're working with a professional who understands what that shift means and what the right strategy to go forward would be. So if you're considering making a move and either buying a property or you've been in your home and you're looking to sell, it's still a great time to do both. Just make sure you're working with the right professional. So I'm here. If you have any questions, feel free to give me a call. I'll put my contact information at the bottom and I'm happy to talk you through it. Hope you all have a great day and I will talk to you soon. Take care. Bye.